What's happening, guys? Happy Mother's Day to all the moms out there. Just in case you forgot, you should probably pause this. Go wish your wife, if you have kids, a happy Mother's Day. Potentially your mom, if you can call her. If you forgot, maybe that's a little bit more important than continuing to watch this. But if you've already done that, then we're good to go. But I am going to try to fly through this one just because got to get back to the wife. It's her day. Anyway, first and foremost, May 22nd, I'm wearing my Traders for a Cause shirt. We are doing a one-day free event. You know, typically we go to Vegas, as you guys know, and then last year with COVID, we did 2 virtual events, and they did absolutely way better than we expected. And the feedback was great, the speakers were great, and we ended up raising quite a bit more. You know, we didn't have any overhead, we didn't have to secure a spot. And there was just some really good quality content, as well as meeting new faces and networking and finding out about new people. So that was really great for me anyway. There's a link in the description. There's a link on my scan page. You guys can sign up. You'll need to sign up for that. You'll get the invite in order to access the live stream of the event. So make sure you guys do that. It is free, like I said. Do so now if you'd like, and then come back and watch the rest of this. Last week was another one of those crazy weeks. And, you know, I'm not trying to, you know, separate myself from other people that are saying that it's slow and me continually saying that it's not. But this is my style market. This is what I enjoy. You know, I don't have to deal with these low float type names. We're getting 50 to 100 to 200 million share trades. Literally, you know, every single day there's a new one that kind of is the trade. And the ability to kind of see that, make sure that you don't get exhausted on the front side, potentially even take part in the upside, and then obviously being able to take advantage of the backside unwind. We had a lot this week. We had OCGN, ATNX, IHT, a bunch of different names, some thin, some not, but you know, the ones that I get excited about, the ones that, you know, I really am able to size into and have conviction are the ones that are thicker, really big floats, a lot of volume, but really outlier range. And, you know, OCGN is a perfect example of that. So hopefully we have more of those. The one note that I will make about OCGN is, you know, it reminds me of, if you go back, maybe it was like 2 months at this point, when the market pulled back. You know, it was the crash, like 3-day crash where everything just completely unwound. And when I say crash, I mean it pulled back like 1%. But the point being here is that FCEL, Plug, we had Neo. We had a bunch of those names that just were like melt, 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 and then rally. And one of the things that I said during that time was don't underestimate the rally. Don't underestimate how far it can also squeeze back out. And so what happens is you have this, you know, steady 3-year, 5-year move, whatever, and then it unwinds and it goes way further than you think. It rebounds way further than you think, and it fades back again further than you think. And after that, it just starts to slowly fade off. Or, you know, maybe it holds trend, but the volume starts to go away and the edge goes away. So it's up to us to recognize when that stops, right? When the edge gets less. So OCGN is a perfect example. I think that we'll probably have another day or two of solid trades on it. And then until they have another PR or some type of news event, I think that it's going to start to fade off my radar, fade off many people's radars, and the volume's going to go back to maybe 8 to 10 million a day, for example. So the size in which I'm trading now would not be acceptable, you know, during those times. The risk obviously goes up. So anyway, you know, my goal is obviously just to take advantage of that while it's here. And you know, you never marry these types of things. You just kind of rent them for a little bit and you move on until they are back, you know, on the radar with news, with volume, and they're having those outlier events. So I think it's most important to understand, you know, the OCGN situation is much like FCEL and Plug and Neo, where it unwound. Don't underestimate how far it goes back up. We already did that. We unwound again. Now we're going to go up further than you think, and then the volume's going to fade off. And it's your job, it's my job, not to get chopped and assume that it's always going to be the same and always going to be just like the past. So, one thing that I've got us broadcast every single morning, 8:50 a.m. We do it at Investors Underground. This is something I started, I think it's been maybe a year and a half now at this point. But, I zone in and focus on two major names, right? And, I might have a handful of watches, but it's two focus names. And by doing this and by having, or at least needing to condense my watch list down to two main names, that's my goal every single morning. It allows me to focus and allows me to ask myself, what is the best, bang for the buck out there? What is the best opportunity? Where is the best edge? And because of that, because I verbalize those plans, because I do that every single day, it makes me better. And so broadcast has been incredible, and it's helped me a lot. But this past week or two has just been exceptional. I think 2 out of the 5 trading days, the last 2 weeks, I've traded right off the open. And the other 3 days, I did not even touch the buttons until after open. I had a couple trades early on in the morning, but then that was it. I just moved on, and I waited until like 9:45, 10 a.m. Because what happens is we get zoned in. Sometimes we take a trade from 9 a.m. to 9:30, and then we try to make it work, and then we miss everything in that 10, 15-minute time period because we're trying to fix a prior trade. We're trying to figure out a prior trade. And like I talked about last time, our blinders go on. So I found it most important to really take a step back and really not be so aggressive right off the open. There are definitely opportunities. And so my mindset off the open is, nail, bail, and then look for the bigger picture trade. PTON on Friday. Picture perfect idea. I didn't try to be a hero. I didn't try to nail the unwind. In my head, I was thinking it was going to unwind and potentially go red all day, right? And it ended up doing that, and it was great. But if I had too much conviction right off the open, I could have been squeezed out, and maybe I would have pre-exhausted myself. Instead, I traded what I thought, traded what I saw, and covered, reshorted, covered, and as it proved what I thought, I started to scale in. Started to scale into that winner. I already had a padding, and that way it allowed me to kind of pull back from any biases that I had and let it prove to me. Let it prove to me that I am right. And if it proves to you that you're right, by all means, scale in, use your risk, use your stop, and go for it. Last couple things, and then I will get into the questions that you guys sent in. Scan trades versus trades and price alerts. So I've found that most recently, the scan, the prep that I'm doing at night is perfect when the alerts hit, right? So I'm prepared for it. I know what I'm looking for. I'm ready. I'm familiar with the chart. And when I see a price alert hit, I can react. But it's not so much that I'm preparing for that 9:30 a.m. trade. I'm preparing for the bigger picture, right? And so now I know I can have a little bit more conviction, knowing that I've seen this, knowing that I'm familiar with what's going on. And really that is the reason why I'm doing scans right now. If you go back 6 months, I'm doing scans so I can react right out of the open. 9:30, 9:31, 9:32, and then be on the right side of the trade and nail that open. But the market has shifted, and that's why a lot of people are saying that it's slow. And so because of that, I've adapted, and I'm waiting. And I don't get bogged down by what happens at the open. I'm getting clarity in the morning pre-market, figuring out, okay, these are all potentials. What are my main watches off the open, and what would make me trade? And I had tweeted something last week about a quote, you don't argue with stupid people or something like that because they'll bring you down to their level and beat you with experience, right? And it got me to think that trading's very similar, right? Because they start to channel between certain levels, these stocks, these names, and they really try to get you into their levels. They try to get you excited it's about to break down, and then you fall for it and you short, and they squeeze you right back up, right? Because they're beating you with experience. You're falling for it. You need to wait for your levels, your plan, your goals, and rather than act with like an emotional entry. There's a lot of times, I even say it sometimes in the room, normally I'd be chasing here, and 30 minutes later, when you have conviction because you've been right for 20 minutes, 25 minutes, 30 minutes, starts to turn, 30 minutes later, you're red. So for me, patience. I don't care about the trades, 9:30 a.m. for the most part. And I set price alerts on everything like you guys know. I mention that all the time. Volume for me is everything. There's a lot of low floats going out there. We had RHE. IHT was kind of borderline. It traded relatively thick, so I did trade that one. But BTX, RHE, there's a handful, right? And any of the lower float type names. Sometimes it's fun and it's good to trade and you trade that first move. At least I do sometimes. But after that, the amount of attention that it starts to take from you, it's just not worth it for me. I'd rather have that full liquidity like we talk about, the OCGN styles, the FCEL styles, all these SPACs that are rebounding. Real liquidity, not one newsletter went long, one newsletter sold, and then, it adjusts accordingly based off, whatever the newsletter is doing, right? That is increased risk for you. So whenever a newsletter is involved, I tend to steer away. And quite honestly, I used to monitor all of that, and I've made a big shift over the last 6 months. And sometimes I felt like newsletters and different rooms that were getting long were giving me a little bit of false sense of conviction. And for me, I'm really good at sensing the tape and reading the tape and understanding what's happening. So I'd rather actually just see what that move does and not necessarily know what it was, because I'm not going to have something in the back of my mind kind of making me double think or think maybe a room is super, super stuck long and then it ends up squeezing out, things like that. So for me, I've just kind of cut out all that noise and really just zoned in and focused on real liquidity, real action. I can tell what is unnatural, but being able to react based on what I see in the tape is much better than trying to monitor all these different rooms and kind of see what they're doing. Let's see the other notes. Patience versus pre-market. So I kind of hit upon this, but I'm being super, super patient right now and just zero rush. I told you guys a couple videos ago that I'm back to taking those longer walks in the morning. I'm not doing those 4, 5, 6 a.m. type stuff. There are some trades I might take 7 to 8, and then usually I'm out, move on, unless I'm on really the right side of it and it doesn't appear to be like a squeezing type of name. And then after that, I'm focused on getting a feel for what's going on, and it's given me a lot of my time back. Because as you guys know, once you press the buttons, I'm there. I'm at the desk. Earnings plays and no news plays. Caution. Those are the last two notes. So earnings plays, PTON. So we're going to have a lot of those. And so for me, I really like to focus on 9:45, 10 a.m. plus. Is it holding versus VWAP? We had BGFV this past week. And nice earnings breakout. And I liked dips versus VWAP after 9:45, 10 a.m. That way you're not getting chopped out of the open. PTON, depending on how it reacts. And then pops versus VWAP for the fade. You can use VWAP as that risk, and it helps out quite a bit. But I'm going to be taking probably 1 or 2 earnings plays per week. Per day. As probably a main watch. I'll be looking for that kind of stuff. PTON was one of them. So whatever has a huge earnings gap or gap down, on Monday, Tuesday, Wednesday, it's probably going to be one of the main watches. So I'll be looking for that opportunity, and that will be added to the watch list. And right now we are in a market of no news, low float, 150 million shares on LEDS. The one thing that I would stress is there's no reason for these things to run. Now, that does not mean that they can't keep going. That does not mean that you won't go broke shorting them. That does not mean that they have to pull back. But when they pull back, when they fail, when they stop going up, when they fail to follow through, understand that there was no reason for them to run. Understand that there's no reason for them to be up. Understand that there's no news. Because a lot of times you see a BTX, you see an RHE, and you want that next black swan event. And you will hold all these, and you will lose 30%, and then another 30%, and then 50%. And all of a sudden, you're chasing all those black swan events, and your money's gone. So just keep that in mind. It's fine to trade the front side in my eyes, being aware that, hey, you probably shouldn't have a high conviction amount of money in these types of trades. But once that stops going up and you've got either that kill candle or it starts to fail, be aware that there's no reason for them to be up. I've lost so much money trying to find the next RHEs or BTXs in the past that, this is that type of market. You see LEDS, and then all of a sudden you've got AWX and all these other names last week going. They were great trades on the front side. But if you started to average down, add into a winner, ruined your average, you get stuck. So that's that. Twitter questions. So once again, if you can please leave a thumbs up and your key takeaway, that always helps us. I do appreciate it. We're kind of stuck at like 500-600 likes. So if you can add a like today, if you don't normally, I would appreciate that. It helps us, helps you. And the key takeaway, if you post the time, it'll allow other people to go back and check it out. And I'm sure you guys have seen the videos that we're doing. So, all right, guys. So, Twitter questions. I was thinking this, but didn't comment. More so the ideal time to get long. I'm constantly fighting the urge to get long on a show, strength off MA like 200, but trend line, daily 90 MA ends up resistance. Yada, yada, yada. So, for me, depending on what I'm looking to do, if it's a swing type of trade, I typically look for a very high volume day. And then I look for consolidation, and I look for those wicks to get bought up. That is on the daily chart. Not so much about, a 200 MA or 90 MA. A lot of people use that. So that's a great tool because you know that there's going to be an audience there. But for me, I try to look for the very high volume that might be like that transitional day. And then after that, I look for those wicks to get bought up. Because what that suggests to me is somebody positioned day one, and then they let it do its thing, and then they're slowly picking it back up along the way. I want to see that, and I want to wait for that to happen before thinking that, okay, it had high volume, it has to go. Because a lot of times that might be a liquidation day, right? So you might be one and done, and that's it. And it's long trend back. I want to be proven. I want to see it higher wicks. And I'd rather buy higher. I really would. I'd rather buy higher than try to anticipate the rebound. Because as you guys know, a lot of things do not go. And then intraday, I'd rather see things kind of firm up, 9:45, 10 a.m. That's why I stress a lot. More of a reactive trade off the open without the whole big picture idea, getting the meat of the move. Typically, I save that sort of thesis type of trade until 9:45, 10 a.m. plus. Because that way, the emotions out of the open have kind of calmed down a little bit. And so, it gives you a little bit better of a read. Maybe you're trading a little bit less size. You're waiting for things to calm down a little bit. You have a better risk profile. How to strike the balance between giving a trade room to work and keeping risk in check. So, a good example of that is, letting things get away from your average. And then as it sets up again, I might scale in. Now, RAIL, RAIL, was a great trade. And, I was up a couple bucks per share, pulled back, consolidated, started to break out again. So I added to the position. But then it started to fail again. So instead of being top heavy, I readjusted my risk. I took off that ad. I'm back to, the prior size that I had. So that way I'm not just ruining this trade because I added at the top and then it unwound, only half, and now I'm even. And it also brings back the emotions in check, because if you have too many, you're going to start to make more or less sound decisions rather. So when you're buying too much, too high on the breakouts, it's going to ruin your average, and you're going to kind of second guess yourself. So I think it's either best to trade smaller with the bigger picture idea, or if you are scaling into it, make sure it does what you expected. And if it's not doing what you expected, just pull it back out, peel it back off, go back to your regular core. Overall, I want to see trades hold trend. I think that's really the key, keeping your risk in check and letting it work. It should be holding that overall trend. You should be looking at daily chart support, looking left, kind of have a feel of what is, what would make this trade continue to be right, and where would you be wrong on the trade. And really, that's what it comes down to. If it's not going to your plan, then move on. That happens. We're not going to be right on every single trade. And it's about being wrong. I've said this before, but being wrong is right? Because the ones that are not wrong are the ones that are still in and still waiting for things to happen, still scaling into a loser, averaging down, you name it. So being wrong is right. I want to hear about your journey. How did everything start clicking for you, turning point, and took you to the next level? So I'm not going to waste time with the hear about the journey from the start and stuff. That's all available online. But I think that the key for taking yourself to the next level and really stepping up your game is to stop trying to make money and really start to focus on the best setup that you execute well. What is the setup that you execute well on? And you'll find that it's actually happens less than you think, and you just need to take advantage of it when it comes, right? So rather than always trying to nail everything, rather than trying to size into everything, you can trade and practice new ideas and scaling techniques, and you name it. You can do all these different things, but you gotta know what you're good at, and that's your A+ setup. A lot of people ask me, hey, what's the best setup to build an account, a small account? But I can't answer that. That's up to you. My best trade may be your worst trade, right? So you need to find out, what do you as an individual, what do you have the best success with? And in my opinion, that's where you should focus, and you should exploit that for everything that it has until you expand your playbook a little bit. And then as you expand your playbook, you'll have more and more different styles of trades that you can adapt to. And when the market shifts, you're not going to be out there on Twitter saying that it's slow. You're going to be shifting to different strategies that you use in different markets. So really the key is, and I just had this conversation too. I think I'm going to hit it on the next question too. But you need to think about, when you're trading best, how do you perform? What do you do? What are the if you're firing on all cylinders, how are you trading? And no matter what, you should always be trading just like that, even if you are in a slump. Because what happens when we're in a slump is we try to make back, and we overstay. We think that if we stay at the desk 12 hours a day, that's going to help us out. It doesn't. You got to do what you're doing when you're doing your best, always. Look left is an excellent concept. Thanks for your way of teaching, but for how long? Previous day, 5 days a month? I always look back to the highest volume day, or the last couple high volume days. And I always post charts on Twitter, so you can always see, the time frame that I'm looking back at. Sometimes 3 months, 6 months, whatever it takes to see it. And then on an intraday basis, you can just look at the levels. Where did it exhaust out before? Where did it have resistance before? Resistance becomes potential resistance again when it retests, or does it become support? So those are always the key levels that I put in the room and I focus on, and it could be on a 1 minute interval. It could be on a daily 3-month chart. Just depends on the trade and what it is that I'm looking to get out of that trade. Last one, getting yourself out of a slump and adjusting to market conditions. Swings that have worked for me have been crushing me. I'm part-time, so watching all day isn't an option. So I think the biggest thing is to understand what is a swing market and what is not. What themes are working, what is not. And we talked about the end of 2020. You could literally swing anything that hit a accumulation scan, any breakout scan, and it would be higher the next day. You just throw money at anything and it worked. And then there was a period of time where that did not work at all and everything just, went right down. And we talked about that. All my momentum trades, I had downsized perfect timing right before, but I still had exposure. And, even with a smaller exposure, it just slowly, faded off. And I was like, well, I guess that's done. And so same thing like 2-3 weeks ago, I had mentioned that swings kind of felt like, it wasn't working in the way that it was. And then all of a sudden it just got hot again. So you just got to understand what sectors are hot, what themes are hot, and just keep on rotating out. And I always look at, sometimes the market value of my swings and just make sure that, am I oversized? Is it's still working, but am I oversized? Is there a catalyst coming and all that kind of stuff? So really it's just what's working in this current market environment. And if it's not working anymore, readjust. Maybe in some market environments, hypothetically, you'd have 2,000 shares, and then maybe you'd scale into 5. And that same name in a different market environment, maybe you've got 20,000 and you scale 50,000 shares, right? So it all depends on, what the setup is, what your average is, what's happening, and you just got to adjust along the way. So that is it. As usual, it's Monday tomorrow, so put those brakes on if you need to out of the open. There's nothing worse than, getting on the wrong side pre-market and starting your Monday off red. So make sure that you're focused. Make sure that you're waiting for the trades to come to you. And let's get right into the main watches for this week. All right, guys. So as you guys know, I am not a financial advisor. This is educational and informational purposes only. I'm just giving you kind of a guide of what I'm looking for so that it can help you make your own plans. You can kind of see how I prepare for the week ahead, how I would trade particular names, and hopefully you can start to see these patterns, you can start to see these setups and be able to make the calls yourself. So for me, as I said in the first part, scans are scans right now. It's super helpful to stay familiar with a lot of these trades. Most of them I'm trading, but I'm not using it in the same way that I did before, in the sense that I'm going to trade this right off the open. I'm going to trade that right off the open. It's not that type of market for me right now. It is, these are the ones I'm interested in. I'm going to wait, and I'm going to wait for them to set up, and then I'm interested. I'm going to set price alerts for the ones that I don't see. Maybe X. There's a good chance that it falls off my radar. But I'll set a price alert, 27.50s, 27s, and maybe 28.50s, 29.30. That way, when it breaks out of trend, I know that I'm familiar with this chart, I'm interested, and maybe if it extends 30, 32, I'd be interested that day. Might not be tomorrow. So, first and foremost, PTON. Fabulous trade on Friday. Great way to end the week. It was my focus name besides IHT, but perfect plan. Goal was gap up, some type of parabolic move, and then join the trend, failed follow through momentum. You can see it failed versus VWAP. You can see you've got this crazy action off the open, pulls back, and then 9:45, 10 a.m. plus, you can see that it fails versus VWAP the rest of the day. So great unwinds, taking advantage of all the flushes, not trying to be a hero. If flushes out, cover some. If it starts to stay heavy, re-lean into the winner. So I did that throughout the day, as you can see from my trade. But, for Monday and the week ahead, I think it's important to kind of look at the levels that held. And you can see 84, 83.50, 84 range was kind of, a steady consolidation. So I want to be cautious of getting too aggressive around the 84 level, because this could easily, ramp to 86. It could easily go to, 82. So I want to use 84 almost like a VWAP level. So if it starts to break off that 84 level, I'll probably use that as a support level. If it starts to fade off and it's failing, I'll probably use that as that resistance level, and I'll make a trade in size based off that 84 level. So reactive trade, not here trying to make a call one way or the other. Just don't think that it has to do anything, because we get in trouble when we think that it has to continue to go a certain way. And a lot of times it actually does, but just not on your timetable. So, it might actually be strong the next 2 days, and then you look back by Friday and you're like, I knew it, and it's at 75, right? And so, we have these MRCY, right? So we have a big gap down, and then they come back, and we just saw this on ESPR, right? So we had ESPR where it just gaps down and then it rallies back. So you really don't know if, it was just a one-day event and then it's going to power back, or if it's going to stay weak. And I think these are two really good examples, ESPR and MRCY, where, you look at it one day and it's, dead, huge gap down, crap. And then guess what? It's filling the gap. It's coming all the way back. So it's a good reminder that respect the trend and make sure you keep it on watch. And the higher it goes, the better, because once it starts to fail versus VWAP, we have a potential trade. That's why I always keep these things on radar. X, I'll be watching. Beautiful breakout. This should bring a lot of steel names. I forget the other one. There's a lot. I think TMST and CLF. X. You can watch all these different names, and obviously huge breakout, huge bull market there. It kind of reminds me of Solars, right? And Solars, not anymore, but Solars were always going, and they lasted way, way, way longer than you expected, right? And they did things that you didn't even expect or know that were possible. So, I'm not getting all bulled up here, but, don't be alarmed if this goes 35, 40, 50, in the coming months. And keep that in mind when you get on the short side and you're like, it's really broke. It's gone too far. It's got to pull back. No, it doesn't. So just make sure that you're taking advantage of the days that it's got that outlier volume, that outlier range. But don't sit there and say, it's gone too far. It has to pull back, because it doesn't, and it will last way longer, just like SPWR, than you think. And then you're gonna get so exhausted of it, you're gonna take it off radar, and it's never gonna be able to find a bottom, just like Solar now. So keep that in mind. OCGN. I'll be watching this one. This is exactly what I was talking about, where you've got this huge move, pretty much goes to nothing, overextension, comes back, overextension backwards, squeezes out overextension, unwinds overextension, and so ideally we've got a gap up on Monday, squeezes back out to 10, maybe even higher, because everybody's like, well, it was just in the 7s. There's no way it's going to 10. They all hammer in at 10. And then we squeeze out 1020, 1050 would be awesome. And then once everybody's blown out, I'm interested. So I always try to go on the other side of the trade. I always try to let other people find the top for me, or the bottom. I don't need to take, the exact bottom or the exact top. Sometimes I might trade it if there's a huge candle, a huge exhaustion level. If it exhausts everybody out, that's an edge for me, because I'm good at that trade. But that slow, steady unwind, that's where you get in trouble trying to find the bottom. So not worth it. The ones that I was comparing it to earlier were FCEL, and we had that over here. we had this big exhaustion candle here. So this is down, 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 down. You can see this day it was down to 1380s and it came all the way back up to 16s. So that's the kind of advantage that you can take. OCGN was that on Friday, right? It went all the way down to under 7 and then all the way up, high 9s. Plug did the same thing that day, if you guys remember. But point is you've got that move, that overextension, again, comes back, and then the volume starts to fade off, and, there's not really much of a trade. Failed follow through a momentum. I'll be watching ESPR, higher the better. Hopefully they continue to trend this thing up, but I will set price alerts. So typically I kind of look at, where it had trouble. I'd probably set an alert at 22. I'd probably set an alert at 2150s. And then that way when it's pulling back, it pops up and I'm like, oh, that's right. I wanted to fade that. I'll put on a few because that's a trade that you don't necessarily need to babysit. Let it work while you're trading other names. You look back towards the end of the day, you get a nice little cushion. IHT, beautiful trade. Again, another example, all these trades that are running and moving for, zero reason. Really nice unwind, came right into the close. I covered towards the close. In a perfect world, we get up, we retest towards these prior resistance points or support points, which may end up becoming resistance. So in a perfect world, if we were to have some emotional cover, some people nervous, whatever, I would love to see a gap up 380s, push through 4, and use that 440 as sort of a guide for the trade. So phenomenal trade on Friday. You guys can see my trade. I was patient with it. I let it work, and it was worth waiting for. LEDs, LEDs. Again, another example of, why is this up? Why did it trade 150 million shares? We don't know. We'll never know. But we don't complain about that. Gives us opportunity. The key is not to step in front. These things can go way, way further than you think. Just because there's no news does not mean it has to come back. But when it does turn, this is that reminder that I was making. When it does turn, don't be adding and adding and adding and thinking that it has to bounce just because it was strong yesterday. These things don't have to. So for me, likely unwinds back towards 6s. But a PR can change that. This is a liquidity trap situation. We've got 160 million shares down to 14 million. So roughly 10%. If we're only trading 1 million or 2 million on Monday or Tuesday, and there's a PR, we could have a really nice trade here. So again, no news, no reason to go. Expect it to unwind to 6. PR changes everything. Continuation setups. EBON, I was a little excited about just in case Dogecoin continued to go. It ramped after hours. It's still, it still very easily could go because there's a lot of excitement around Dogecoin, especially this weekend with Saturday Night Live. Elon didn't exactly, push it like everybody was probably hoping. They just mentioned it at the end of the skit. But either way, if it gets noticed, which it kind of did after hours again, they had put out a PR with Dogecoin a while back that they were going to be mining it potentially. So that's kind of why that got put on radar. And so it's definitely worth a watch considering the fact that it has, come straight down. A couple others, LEXX. This was a phenomenal trade on Thursday. Came back consolidated on Friday. And for me, 680s is still that same key level. I like the way that it consolidated. We did have 50 million down to about 2.7 million. So again, another potential liquidity trap. If there's a follow-up PR, if we trade over 680s, I would definitely have that on radar for a nice squeeze. BCRX, you want to assume that it's going to have trouble at these 14s. If we were to gap up over that, I'd be looking for a fade. But watch because this had some really heavy volume this day right over here, and we're really nearing a huge breakout. Each time it gets there, it fails. Take that into consideration. Assume that it's going to fail there, but if it gets through there, we could get a nice multi-day $2, $3, $4 type squeeze. A couple other watches, DXF. I've been meaning to get long here. I've had it on scan all week, but I just, I haven't put any on, I don't think. Yeah, I haven't yet. 10, CYH. These are all names that I'm looking to potentially get long on dips, just because great charts, and they've been on either earnings breakout or just some sort of catalyst type breakout. So that's really what I'm prepared for. Again, my preparation is not for 9:30 a.m. trades anymore. It's big picture, staying familiar. I have another section called staying familiar, and essentially I just write or put in price alerts. So, I've got TQQQ, which has been a great trader every day, FNKO, RHE. There's other names on scan that I don't go over, but basically what I do is when I get to my desk in the morning, I look left, I put in all these price alerts, where would I potentially take a trade on it, and then that way, as soon as the market opens, your charts and your level 2s are going to change. You're going to forget about all these. So that way, when it hits the particular level that you cared about, you're going to be alerted for it. And that's why I don't miss a lot of these trades, whereas, I used to. In the past, I used to, beat myself up a little bit because I'm like, I knew that was going to happen, but I lost it off radar. This will help you not lose things off radar by setting price alerts. And fortunately for us, my eyes are trained to be, in IU, in the room. So, any other platforms that I have, I can have price alerts, but I won't see them until, after the day's over. The one that we have built into IU, it alerts me right where my eyes are at all day. So that's it. Again, please leave a like. Please leave your key takeaway. You know what? I didn't prepare at all today. So let's see. We've got to pick a winner here. Jonathan Lake and Moving Trader. We'll send you guys out t-shirts, so just email me, webmaster@investorsunderground.com. All you guys have to do is leave a key takeaway and leave that timestamp. Give us a like, and you're automatically entered for a potential t-shirt, scans, Icon Meals, IU Chat, Momo Traders book, you name it. So have a good rest of the weekend. Again, don't forget it's Mother's Day, and we'll catch you guys all soon.